Ladies and gentlemen, good afternoon, and thank you for joining us on this webinar. My name is Tahir Mahmood, and I am honored to be your moderator for today's fourth GIES webinar entitled The Opportunities and Challenges in the Sukuk Market, organized by Dubai Islamic Economy Development Center and Dubai Chamber in strategic partnership with Refinitiv. After a slow spell in the middle of the last decade, the Sukuk market has grown significantly in the past few years. 2019 was a year of record issuances, with over $162 billion of Sukuk being issued globally, a growth of 31% compared to 2018. And the overall value of outstanding Sukuk reached $524 billion, the first time that the Sukuk industry has crossed the $500 billion mark. The rise was driven by growing sovereign issuances in the GCC, Malaysia and Indonesia, significant growth in the corporate issuances, which grew by 34% last year, and the increasing popularity of short-term issuances and new instruments such as Green Sukuk. Trends in 2020 were disrupted by both the COVID-related disruption as well as turmoil in the commodity markets. The spread of the novel coronavirus brought economic activity to a halt worldwide in March and April. As some countries brought the first wave under control and some economic activity resuming, so did Sukuk issuances. Most of the issuances since then have come from sovereign issuers financing their COVID relief packages to support businesses and individuals. But as we look towards the new norm that will be in place after the COVID pandemic has been addressed, we can already see the growing significance of ESG and SDG considerations on capital markets. This is expected to continue to drive the developments of new Sukuk instruments. We'll talk more about this in the session. Before we start off the session, I would like to go over a few housekeeping rules. For any technical issues during the webinar, you can click on the chat bubble, type your concern, and my colleague Dua will be able to assist you. Please click on the three horizontal buttons next to the red X mark to activate the Q&A and poll window on your screen. For any questions for the speakers, you can click on the Q&A and direct the questions to me. Please note, in the interest of time, we may be unable to address all the questions with the speakers. During the session, you will be participating in polling questions. They will appear on screen and allow you 30 seconds to respond to the poll. The recording of this session will be circulated to all attendees after the webinar has ended. Our panelists today are colleagues here in Dubai who have vast experience in the Sukuk space and will share with us their knowledge and insights into the market. I would like to introduce you to Angad Rajpal, Head of Fixed Income at Emirates MBD Asset Management, Ali Tawfiq, Director of Debt Capital Markets at HSBC Bank Middle East, Dr. Mohammed Damak, Director and Global Head of Islamic Finance at S&P Global Ratings, and Mohiddin Kronful, Chief Investment Officer of Global Sukuk and MENA Fixed Income at Franklin Templeton Investments. Gentlemen, thank you all for joining us today. Mohammed, let me start with you. At S&P Global Ratings, you provide a lot of research and insights into the market. I know you've been an active educator of Islamic finance and promoting the market. 2019 was a fantastic year for the Sukuk market, and as we started 2020, the year was looking promising, and then came along COVID-19. As activities start to increase again, will 2020 meet expectations? What are your thoughts?
Thank you very much, Tahir. Very good afternoon to all of you, and thanks for the organizers for inviting me. I think, as you rightly said, when we started the year, we were expecting the volume of issuance to be around what we have observed in 2019, $162 billion. And the expectation at the time was that the economy in the GCC will see slightly better performance compared with 2019, and the market conditions will remain supportive. And then COVID-19 pandemic and the oil price decided otherwise. The macro picture has shifted completely, and the economies in the region were going into deep negative territories because of the lockdown measures and also because of the drop in oil price. At that time, we revised our forecasts to a sharp decline in the volume of issuance and put the overall expectation volume at around $100 billion for 2020. And then what we have observed is that the central banks in the region and globally have opened the liquidity tap widely. And more recently, I think they made it clear that rates will be lower for a long period of time, which has created a window of opportunities for issuers to start tap the market again in an aggressive way. So where do we stand today? In terms of volume of issuance at the end of August, I think the overall volume of issuance was down 70% compared with the same period last year. But interestingly, the volume of issuance in foreign currency was up by 12%. And that was primarily explained by banks, multilaterals, and to a lesser extent, sovereigns. I think what we have observed is that corporates are not issuing that much. They are basically holding on to cash and reducing capex, trying to navigate the uncertain environment. And also what we have observed is that central banks were not issuing either, because they are rather injecting money into the different system instead of taking it out. So in a nutshell, I would say 2020 so far was broadly in line with our revised expectation, but certainly the performance will fall short of what the market can offer in such context.
Thanks for that, Mohammed. And to hear that it's down 17% compared to this time last year, it's actually not as bad as some would have expected. So it is, I'd say it's performed better than expectations, considering the difficulties and the pandemic we've gone through this year. Thank you for that. Dino, we conducted a webinar together here at Nasdaq Dubai back in July, where we discussed the fixed income investment landscape. And one of the points we discussed was defaults, because there was a lot of noise earlier in the year that the pandemic may cause a number of defaults in the fixed income market and Sukuk as well. Has the pandemic affected the Sukuk market and its liquidity? And can we expect any events of defaults in the coming months?
So good morning, Tahir. Thank you for the opportunity. The short answer is no. I mean, we don't see a really noticeable pickup in default rates. Obviously, I think Mohammed and S&P can speak a little bit more to that. But, our expectations is that they're going to tick up slightly. We've already had one default this year related to a healthcare company. There are some real estate companies that may decide to restructure, but these are driven more by sort of fraud or malfeasance rather than sort of excessive amounts of leverage. In general, when we think about the global Sukuk landscape, or we think about the GCC bond market, which makes up a big portion of the investable universe, you tend to find that, companies are pretty high quality, the sovereigns are pretty high quality, the banks are in very good shape, and so we don't expect default numbers to be anywhere near the expectations you have in the developed world or in the larger emerging markets. I would like to just comment that in the introduction, I felt like both you and Muhammad were kind of letting the Sukuk market a little bit off the hook here. It's true, we do have growth in the market, and people do point to the tremendous sort of advancement of the industry over the last 20 odd years, but there are some worrying signs. So if you look at a little bit closer or more recently, you'll tend to find that the growth rates have really come down, quite a bit. So the CAGRs, or the compound annual growth rates, over the last 10 years have fluctuated between 8 to 10% versus a much longer time period where it was more than double that at 25. We still find that sovereigns and banks represent 80% of the issuance. It's still too concentrated. We've seen a dearth of high quality or investment grade issuers come to market. Also, over the last 10 years or 11 years, almost half of those years have seen negative growth rates. So you have a good year, then you have a slightly negative year. So we're losing a lot of, in my mind, momentum here, and and I don't think we want to. I don't think we should sort of rest on our laurels, so to speak. There's still a lot of work that needs to take place. We need a lot of governments to reinvigorate efforts to develop their Sharia-compliant markets if we want to see this universe or this industry really develop and achieve the potential it can, because right now I'm seeing too many worrying signs, and I think we should all collectively really do a little bit more pushing to see the industry develop.
I think both Mohammed and I are very big supporters of Islamic finance and Sukuk market, so we're always talking positive on that note. But look, you mentioned that there's a lot of government issuances when it comes to Sukuk, or the very large, good quality corporates, and we'll talk about later in the session how can we develop the Sukuk market and what are the key factors for the growth of the Sukuk market. But we always look at, when it comes to Sukuk, how is it doing against the conventional market. Under the Emirates MBD Asset Management, you're dealing with investors as well as managing some of EMBD's funds. I'm sure you get asked a lot about Sukuk from investors who may not be familiar with them, and so they'll want to compare them to conventional bonds. Can you share with us how Sukuk has performed compared to conventional bonds, this year and over the recent years, please?
Yeah, I guess the most recent period is definitely a very interesting one. So if you simply look at over the last 1 year, more or less the Sukuk market in absolute terms has done equally well as the conventional peers. But what's really in stark contrast to the conventional peers is, on a risk-adjusted basis, definitely the Sukuk market has significantly outperformed. Your volatility has been pretty much half, and your Sharpe ratios has been twice as much as conventional. So that's definitely, as far as the Sukuk market is concerned, it's definitely been true to its form. March is a great example. You had a pandemic and 3 shocks between COVID-19, a liquidity shock in the credit markets, as well as an oil price shock. But the extent of the drawdown that you saw in the Sukuk market was significantly lower than what you actually saw on the conventional side. Part of the reason for that is structural. A number of long-duration instruments had definitely taken a bigger hit, and those instruments make a greater composition of the GCC index or the conventional peers. But the other reason is also higher quality. Sukuk inherently has a higher quality bias. And Dino earlier was saying that the new issuances and the composition of the Sukuk market has a huge bias towards sovereigns, has a huge bias towards financials. Those instruments definitely took a much lower hit. So overall, Sukuk market definitely has performed well, but I think more importantly, it's on a risk-adjusted basis, it's done a lot better than conventional peers.
Can I interject here? So I think it's very fair what Angad was saying as far as the market or the indices are concerned. But I think it's worth highlighting 2 things. I think one, if you look at the market share of Sukuk in the region, it's been around 20% for the past 3 years. So most of these sovereigns, most of these banks that are opting to choose Sukuk has really come down. This ratio used to be 40, 50% 3, 4, 5 years ago. So we can speak about the development of the market, but I think it's just worth highlighting that. And second, I think just the nature of this crisis and the recovery period after it, there was a pretty significant bifurcation. So investment grade and higher quality issues all did quite well, and that's why the market that we're quoting here did definitely decline less and do well. But if we look at high yield Sukuk, or we look at independent Sukuk corporates, they struggled, and they really suffered. And I think they continue to lag. We think that there's still quite a bit of value in that space, but I just think it's also worth highlighting that if you move out of this sovereign financial high quality segment, the bids really weren't there, and the market, definitely had to face some serious challenges like other markets. So I just wanted to, highlight this because I don't want, the audience to think that Sukuk has no risk. The higher yielding portion certainly struggled during this pandemic.
On that point, if I may, one of the things we see in the Sukuk market is investors tend to hold till maturity, especially when you have the Islamic banks who are investing in Sukuk. Do you think that plays a role when it comes to the lower volatility, if I may say, within the Sukuk market? Dino, Angad, either of you?
Yeah, Dino, go ahead. No problem.
No. I mean, I think in many respects, it's sort of the two sides of the same coin. Yes, this dedicated investor base certainly suppresses volatility, but then when you have a crisis, the liquidity is slower. I mean, I think it has a significant contribution, but like everything, there's two sides to every coin. Sorry, Angad.
Yeah, no, that's a fair point, and I think the other differentiation in this particular crisis, and I'm sure Dino would agree with that, is the recovery that you've seen since the end of March also has been driven a lot by liquidity. I can speak for the flows at ENBD Asset Management. Literally 80% of our flows has been on towards Islamic assets. So clearly, we've always had an issue with the Sukuk market of too much money and too few Sukuk. But that problem is a lot more paramount, especially since the COVID crisis.
Okay, good. Thank you. Let's have our first poll question for the audience to answer. The question is, how important will Sukuk be for governments in Islamic markets to fund their current deficits? You should be able to view the poll. You have 30 seconds to answer, so please go ahead and answer the question. Whilst you do that, I'm going to move on to the next question. When we look at opportunities in the Sukuk market, we've seen a number of new structures that have been developed to assist issuers with their financing needs as the market has developed. And this has really helped provide flexibility to issuers and has helped grow the market. Ali, you're very active at HSBC when it comes to pitching to issuers and putting some of these structures together. I think HSBC has worked on many of the leading Sukuk deals, not only here in the region, but globally. We've started seeing issuers come back to the market, as we spoke earlier. But how have issuers been affected by the events this year? Obviously, we sometimes see the same issuers. Governments are affected, but governments are key issuers when it comes to Sukuk. But what have you seen speaking to issuers?
Yeah, hi, Tahir. Thanks very much for inviting me. I think the market has really developed in the past few years. We've seen a lot more issuers come to the market. And I think in terms of Sukuk structure, we've seen a more of a drive towards standardization here in the Gulf region, certainly. Part of it is driven by regulation. We've seen the UAE Central Bank in particular become a bit more active in terms of regulating the Islamic finance space. They passed regulations requiring that Sukuk structures comply with AOP standards, along with other sort of Islamic finance products. That's caused banks and issuers to take a step back and say, look, how are my structures not compliant with AOP? Because I need to have something which will sell widely when I market to investors, not only in the UAE but also elsewhere in the wider Gulf and in Southeast Asia. So we've seen some innovation. We've seen a move more towards asset-light structures, in the past 5 or 6 years. So certainly the structure space has become much more flexible here. I think we've seen some innovation also from Malaysia. The government of Malaysia in particular is very much keen to, keep its and retain its position as sort of the Islamic finance hub in Asia. And they've also, tried to innovate wherever they can when it comes to, Sukuk structures. So certainly, I think the market has now gone through a period of innovation, and now it's more heading towards standardization. Look, I think with regards to how Sukuk issuers have been affected, Sukuk issuers are very much in the same boat as a lot of conventional conventional issuers, I should say, in the Gulf. I think Dino mentioned it just a few minutes ago, where he mentioned that there's been a bifurcation in the investment grade versus the sub-investment grade market here. Certainly investment grade issuers have seen, spreads and yields tighten such that, yields on offer are now in some cases lower than it was pre-pandemic. Whereas for a lot of sub-investment grade, higher yielding issuers, I think they've had to take a step back and, look at other alternative forms of financing from either the bank market or the equity market, depending on the sector that they operate in. And I think they probably have a little bit of while to go before they can, they dip their toes back into the Sukuk market, just because yields have gone up significantly for them. So I think these are the two, things which are shaping the Sukuk issuer market currently. Just more standardization and just cost of funding currently.
Okay, good, thank you. And we've had the results for the poll. Mohammed, interesting results. 30% of the audience think that it's very important for governments to utilize Sukuk for their current deficits. 58% say it's reasonably important, so they expect 20 to 30% of debt to be raised through Sukuk, and 8% say that it's not important. What's your thoughts on this? Do you think that it's reasonably important, very important for governments in the Islamic markets?
Right. Thanks, Tahir. And maybe before answering your question, coming back to the point made earlier about the growth of the industry, I think we've been quite vocal about the drop in the growth rate of the industry for the past couple of years in our outlook for the Islamic finance industry. And also we've tried to identify the three potential accelerators for the industries, which are the inclusive standardization and all the alignment related to ESG, and also the opportunities offered by fintech. Now, coming back to your question, I think the market will remain a niche market, and I think it will remain a second choice for most of the issuers. I think if you compare what happened in 2020 to what we observed in 2015, you can see some similarities. I think in 2015, most of the issuers in the region rushed to the conventional markets and did not use Sukuk. While in reality, there are some opportunities in the Sukuk market. I think lately Dubai issued the Sukuk that was oversubscribed by 6.5 times versus the 3.5 times of the subscription rate for the bond it issued at the same time. Now, what could be a game changer? How can we push the reasonably important to become very important? I think streamlining the process of issuing using standard legal documents and Sharia interpretation could be a game changer. Today, we are still in an environment where some of the Sukuk issued in Asia would be considered as non-Sharia compliant in the GCC. Also, I think the fintech could be a game changer, or at least establishing large programs similar to what Saudi Arabia did. I think Saudi Arabia established an unlimited local currency program, and that has changed completely the picture in terms of issuance in Saudi Arabia. Today, the government issues every year more than $20 billion of Sukuk. Another accelerator for the Sukuk market could come from the alignment with ESG. Now, don't get me wrong. I'm not saying that all the Islamic issuers are perfectly aligned with ESG, but there are some intersection between Islamic finance and ESG. One of them is the green Sukuk that we saw being used in the region by Majid Al Futtaim. Another one is the social Sukuk, and I think these instruments could grow in the future as the market shifts towards focusing on attracting ESG investors.
Good. Well, let's hold that thought on ESG and green issuances, and I want to talk about something you mentioned there when it comes to Saudi Arabia. Angad, if we look at the region, in addition to UAE, Saudi is also a key driver for the Sukuk market due to the capital available there and generally it being a larger economy. Over the past few years, as Mohammed mentioned, the government's been issuing a number of Sukuk and corporates are also issuing Sukuk. But how is the Sukuk market developing over in Saudi? Can you give the audience a bit of an overview of where Sukuk stands in Saudi Arabia?
Yeah, obviously, I think the best way to describe the Saudi Sukuk market, both in combination with external and local, is slowly but surely it's improving. Clearly, Saudi Arabia established their Sukuk program in 2017, and we've seen a number of instruments issued both in local currency and hard currency. In fact, this question dovetails with the poll that you had in terms of how important would Sukuk be for some of the issuers. Clearly, when you look at first half 2020, Saudi sovereign issuance roughly comprised about 54% of total issuances out of Saudi. And Saudi's reliance on the Sukuk market was roughly 37% of their total funding needs. So Sukuk made up a huge contribution to Saudi's budgetary needs, and definitely the markets have helped them quite a lot. Now, as far as the progress of the Sukuk market in Saudi is concerned, the issue with lack of a diversification is still fairly pervasive. You have pretty much most of the issuances are from Saudi sovereign. No doubt on the Sukuk space, you do have tenors of up to 30 years, but the market really lacks a secondary market for trading these. Likewise, on the corporate side, you only have a handful of instruments which have been issued from STC to Al-Marai. So clearly a lot of work needs to be done. There's no doubt that the Saudi government and the regulators have been doing a lot, their part in terms of reducing the fees, providing incentives for the issuers to come and issue Sukuk. But I think we're still some time away, maybe a couple of years before that becomes a lot more mainstream.
Okay, good. Thank you for that. Let me move on to the next.
Tahir, I would like to just maybe add that in the case of Saudi, announcements have been made recently about wanting to really kickstart or really develop, their bond markets, both conventional and Sukuk. And one of those announcements is about, having those Saudi securities now be tradable on or being able to settle on Euroclear. But what's not really clear is, who can buy them? Do they need to go through the same QFI process like the equity investors need to be? So there's still a little bit of uncertainty around how best to do that. I think that's going to have to be very clear if you want to see this market develop, because not only do you have such a high proportion of Saudi sovereign issues, but when you look at and the improvement there is that the price discovery is good, but when you look at the corporate Sukuk in Saudi, there's very little price discovery that takes place, and therefore these things tend to get placed with almost related parties, and they never trade. I think the whole process doesn't lend itself to sort of a healthy market, in that when they are placing them, they're either too small, they're mispriced, they're placed with a very short number of investors, and then they sit on their books for years, and then we come back and say, well, why aren't we trading? It's because that entire process is not following the same process that you do when you have a normal book building and price discovery process that you have in other parts of the region and the world. So, I think there is work that needs to get done, I think, if you want to see the Saudi market really develop the way, the dollar bond market has for them.
And are you seeing a lot of your clients, show a lot of interest when it comes to the Saudi domestic market? Obviously, they've done the international issuances where they have access to, but are you seeing a lot of clients wanting to get access to that local market?
They ask about it. It's more us, we are the ones that are interested, and we are the ones that want to see the Saudi market develop. But in order for us to do that, we are communicating and sharing our views, and I feel that all of us here on this panel have a responsibility to make that clear. These domestic issues should be priced in a manner that's consistent with the way the dollar issues are being placed.
Okay, good. All right, so look, let's move on to the second poll question, which is what is the most important factor for the continued growth and innovation of the Sukuk market? And this is something we'll be talking about on this panel. Your options are A, continued government issuances, B, market infrastructure such as legislative frameworks and templates, C is new structures aligned to ESG SRI principles, or the fourth one is adoption of innovative technology. You should see the poll on your screen, so please do answer within 30 seconds. So moving on to the next question, I think we're all now at a point where we've adapted to the challenges faced by the pandemic and are getting on with things. We've had to make changes to the way we do some of the things that we're used to. I know virtual roadshows is something all the banks are organizing to raise capital. Mohammed, you spoke about 2020, what we expect in 2020, but when it comes to 2021 and looking forward, how do you see the Sukuk market developing going forward?
Sure. I think it's a bit early to tell, but as we stand today, I think the performance will remain muted. We could potentially see an acceleration, assuming that the economy is recovered as expected and assuming that more corporate issuers start to come back to the market. But overall, I think the positive news there is that we expect market conditions to remain supportive. I think liquidity will be there. The central banks, including the Fed, may clear that liquidity will remain abundant and will remain cheap with their lower for longer interest rates.
Okay. So look, to continue growing the market, we obviously need some key growth drivers to fuel more Sukuk issuances. It's been mentioned around standardization a couple of times. Ali, what's your thought on this? How can we fuel the Sukuk market? What are the key growth drivers?
Look, I think the foreign currency market, especially in dollars, is very well established. But I think we probably see more growth in the local currency markets. So there's been discussions around in the UAE to promote dirham market more. Certainly, there is a strong need for promoting the dirham market. Just to encourage more savings and to give more sort of platform for investors, retail investors to invest in Sharia compliant instruments. That's in the UAE. There's been talk of that's starting from the sovereign level. Kuwait, the local currency market can see some, impetus over there, especially if it comes from the government or the central bank. Similarly, some of the other countries in the region, Oman, Turkey, Pakistan, a lot of them can do much more to promote their local currency markets. Just like we've seen Saudi, Saudi was not really, the Saudi local currency market was, especially the government market, was almost non-existent 4 years ago. And then suddenly Saudi is really shifted towards, promoting very heavily the local currency market. They've made it easier for retail investors to invest. The minimum amount required to invest is 1,000 riyals now, and it's all listed on the Tadawul, the local exchange. So I think that's something which we can see, which we'd like to see. The other thing is just new types of investors. The two gentlemen we've got here from the investment side are both, asset managers or fund managers. But, what we'd like to see is more of them, come into the market. We need to see more pension funds, more insurance companies, because the mainstay from the investor perspective here, I would say a good 70% of investor volume is from banks. And we need to see other types of, investors become more active into the market. But look, apart from that, I think from an issuer's perspective, Formosa market, the ESG angle, and also just capital requirements, for banks to replenish their buffers because of the hit that they're taking to expected credit losses. I think these are the things which will really drive the market over the next few years.
Okay. Well, interestingly, 40% of the audience say that continued government issuances is the most important factor for continued growth and innovation of the Sukuk market. I think one of the points is when it comes to Sukuk market, we keep on seeing the same issuers going to market year in, year out. Every year you'll maybe get 2 or 3 new corporate issuers issuing Sukuk. And I think, personally, that is one concern we have, where we're not getting more new issuers coming to the market. Anga, what's the, from an investor's perspective, What do they see as a key driver? Is this something that they're looking for, new issuers coming and issuing Sukuk?
Tahir, to be honest, I'm not really sure why a lot of corporates don't really come to the market. Dino made a good point where back in a few years back, if you had overall Sukuk comprised 40-50% of total issuers, and I think back then you did have a lot more instruments from other sectors as well. Obviously, corporates has always lagged other parts of the sector. So I sometimes struggle to understand why a number of corporates wouldn't take advantage of super low yields, even though for this particular year your spreads have blown out, but overall your all-in yields still remain fairly favorable from an issuer standpoint. And the Sukuk market, as we talked about, continues to grapple with too much money, too few Sukuk. So I would expect a number of these issuers should take advantage of it and come to the market, especially on the corporate side where I feel there's a dearth of issuances.
Yeah. I was just going to add, Tahir, to what Angad is saying. I'm quite optimistic around the corporate market increasing. I think, cost of funding has come down a lot for a lot of issuers. And I think, a lot of companies are now sitting up, taking notice of that. They're saying, look, we do need to diversify away from the bank market. And I'm quite sure in the next 1 to 2 years, you will see new issuers, new corporate issuers coming to the market.
And that's
I think it's fair to say that this is not just a Sukuk issue. This is really more of a market development issue. I mean, even in the conventional space, we could make the same argument that corporates are not really hitting at the weight that they should be, considering how many large corporates we have in the region that still haven't tapped the bond markets or the Sukuk markets. And so I think that's that's going to be an interesting space, I think, that develops over the next few years. I would also argue that some of the higher yielding opportunities we need to make space to accommodate them as well.
I would also add, if we were to see them issuing, probably they would be issuing in the conventional space, because today, whether we like it or not, the process of issuing remains much more complex than the process of issuing a conventional bond. You need to identify an asset. You need to go and negotiate with the lawyers, with the scholars, before having something that could fly. While with conventional bond, you just take standard legal documents of one share, put the amount, and can hit the market. So I think the lack of standardization, or the lack of inclusive standardization, because moving to the AOEP standard is good, but if the AOEP standard do not take into consideration the market practices, that could be detrimental for the development of the Sukuk market. And this is why it's no longer about standardization of the structure and the legal document, but it's about inclusive standardization that takes into consideration the requirements of all the issuers, the scholars, the investors, etc.
But then coming back to Ali's point around the cost of issuing, a number of years ago, when someone's looking at, do we do a bond or do we do a Sukuk, it was a lot more expensive to do a Sukuk, and a part of that was the whole structuring. But we've seen so many Sukuk now and so many different structures that you kind of do have templates in place. And Dina, I want to sort of, touch on the discussion you and I had in the previous webinar around data and the availability of data. And the point you made was the fact that data is not very easily available here in the region, especially considering a lot of the businesses are private businesses, family-owned businesses. When it comes to corporates, even at government level, the question is data still available compared to more of the developed markets? Can you share some thoughts on that, please?
Yeah, I mean, this is really the heart of the challenge that we have, because when we look at, for example, our ESG sovereign model, we have 75 odd data points that we need to plug in, and you can build this model out, and you can see sort of trends, and then you get to 2000, and I mean, now I'm looking at it just before we got on I look at 2018, and already, something like half the data points are missing. And this is 2018. You still have 19, and then like our European models are populating 2020. So and this is just trying to look at where things were. I mean, let alone being in a position where you can use this data to use it to forecast, where things are headed. And from an investor's point of view, that's ultimately what you want to be able to use the data for, is to be able to make better informed decisions. So that's the first thing, is that it's not available for a lot of the sovereigns, and certainly I think with a lot of the corporates, it's not. And this makes things more difficult, and it ultimately makes things more expensive, because in the absence of the data, you need to sit and make assumptions, and you need to forecast, which are inherently, you're going to err on the side of caution, which means you're going to want more in terms of return. And these are issues that I think are structural. We need to really be addressing them at all levels. And if we don't, we really run the risk of, having to pay more for the funding going forward. Or in our case, for example, we'll start, seeing the impact in terms of performance. Right now, it's not so pronounced. You can almost sort of get away with it, so to speak. But I think if we look forward 2, 3, 4, 5 years, I don't think you can really afford to do that. And I don't think enough people are taking this seriously enough. One of the measures we did, for example, was to look at our universe and send out questionnaires, and ask these issuers that, what are you doing in terms of these different ESG risks, and how can we really collaborate? Out of 140 questionnaires that we sent out, I mean, I can double check now, but I think we've received maybe 12 or 13. Just to give you a sense of the percentages, of the people, of the companies that are being, that are interested in really pursuing this dialogue or this engagement, the number, the data gaps at the sovereign level, and all of this, I think, is going to ultimately really inhibit our, ability to attract ESG-related investments, and then our ability to sort of keep our, sources of funding, competitive. And in the absence of those, it makes, the longer-term plans for the region to really diversify, to develop our markets and all of that, it starts having to deal with more barriers. And, we are here to try to, raise the awareness so that we can really address those and try to minimize these costs as much as we can going forward.
Okay. So before we go into the ESG, just Ali, Dino is saying that in the developed markets, data points are already available for this year. Yeah, in the region, we don't have the data points for 1 or 2 years, in the past. How important are the developed markets for the growth of Sukkot? We've obviously seen UK, Luxembourg, other developed markets issue a Sukkot, but they haven't returned yet. Do you see a key role that these developed markets can play in growing the Sukuk market?
Yeah, it's a really good question, and something we get asked about a lot internally here at HSBC as well. I think the issuers from developed markets who have issued have tended to be sovereigns or supranationals, and I think they're the ones who sort of wanted to, let's say, increase their profile with Middle Eastern investors more and have diversification, and that's why you've seen them issue before. We haven't really seen many corporates and FIs issue. I think the last corporate that I can think of from a developed market was GE back in 2009. And again, they didn't come back into the market after their Sukuk matured. I think part of it was just very much around, the work required and just in terms of, cost of funds as well. They just had a lot of cheap liquidity available when their Sukuk matured. So I think, a lot of it has to do with just the work required, the benefits. But I think part of it is also that, for the CFO or Treasury sitting in Europe or in Asia, or in US, or even in, some developed markets in Asia, how many Islamic finance or Sukuk professionals are meeting them and talking about the Sukuk market? Probably very little. We've got so much going on already in our space here in the Middle East, in the MENA region, and Southeast Asia. There's so many, there's so much low-hanging fruit still yet to pick. That a lot of our focus hasn't been over there, and not many people have actually marketed Sukuk to them. So I see very little activity happening. Probably still a lot of sovereigns and supranationals, if anything, planning to issue from developed markets.
Good. And I think, one of the challenges Islamic finance has had globally is, not just Sukuk, is education, going out and educating the market globally around what Islamic finance is and how you can benefit from it. So, look, I just got a couple more questions before we go into the audience's Q&A. I want to move on to ESG and sustainability, green issuances. We've seen the development of new Sukuk instruments. We've had the issuances of green sovereign Sukuk by Indonesia and green corporate Sukuk by UAE-based Majid Al Futtaim, and the recent Euro-denominated green Sukuk and dollar-denominated sustainability Sukuk issued by the Islamic Development Bank. Over in Malaysia, there's been issuances of green and SDG Sukuk under the Sustainable and Responsible Investment Sukuk Framework. Dino, Ali, how important are things such as ESG and green initiatives for the Sukuk market and the region? Angel, if you want to share anything around it when it comes to investors wanting to see more of these initiatives here in the region. Dino, maybe we can start with you.
So, I think they're really important, and I think we have this nice window now because when you think about ESG in general, different taxonomies and different sort of perspectives on how to address it, it's still being formed. So it's not, I would say, totally clear, what is the best way to approach it. But what I worry about is, what I think is a really good opportunity is that if Islamic finance can sort of really attach itself to the growth of this industry, because there are overlaps, as we mentioned, and I think it would be very useful for the wider investment community to really feel that, and in the case of Islamic finance, they score fairly highly on a number of ESG metrics. But the worry I feel is that some people take this association for granted. They would just think, well, yes, in the case of Islamic finance, we have, these ethical criteria, we have these different criteria. And so, yeah, obviously we would score very highly on a number of ESG metrics. But the reality is, that's not the case. If you look at the Sukuk universe, for example, you look at the sovereigns in that space, not a lot of them score very highly compared to, say, more developed markets. And so there is this journey that we need to go on to be able to kind of improve these metrics and to be able to then make the Sukuk market more mainstream and tap into this, I think, very growing, an important demand base. And so this is the way I look at it. I think it's a great opportunity, but I don't think we should just take it for granted that it's just going to happen. We need to be really working hard as sovereigns, as issuers, as market participants to make the Sukuk market a highly rated or a highly rated ESG investment universe, because we're still not there yet, and I think this is an opportunity for all of us to try to capture.
Good. Ali, from issuers' perspective, are they really keen on looking at these sort of issuances?
Yeah, I think it's I think the market here has lagged what issuers have done in Europe and in Asia in particular. In France, for example, the government has made it mandatory for investors to provide disclosure on how much of their investments are in ESG instruments or in particular in green. So that's driven the market a lot in terms of new issuances coming, because green investors are saying, look, there's not enough supply coming through, and we need to show that we're doing something meaningful in terms of investments in that space. So I think that's really driving interest in Europe. I think over here you had the first few issuers come to the market, and we've seen the green shoots. I expect there to be some new issuers as well coming in this year. It requires a bit of work, and it not only requires just that use of proceeds will be there for green purposes or social purposes, but also that the overall ethos of your company is shifting towards a more green or a socially conscious landscape, if I can say that. So when investors, we for all the issuances we've done, investors like to dig in a bit deeper and just say, look, how is your company changing? How is the direction of the ship, if you like, changing for you? I think it's very important. I think it's picking up. We've seen Islamic Development Bank, Indonesia, MAF, DP World has set up a framework, but they're yet to issue. And I know of a couple of other issuers which are looking. We've seen meaningful diversification for these issuers. For those investors who participate in regular Sukuk, I think you'll see them putting a bigger ticket size because they have specific green mandates, which they also have in addition to regular mandates from their end clients. Where some investor will put in $50 million ticket, for example, or 40, they'll end up sort of doubling that size, and that really helps. And that's really been picked up by a lot of issuers in the region.
Okay, very good.
Maybe Tahir, if I can add, I think the opportunity is not just for the Sukuk market. I think the opportunity is for the broader Islamic finance and the broader Islamic economy, especially with the COVID-19 pandemic, to really show its social added value. And I think besides social Sukuk, which I think Malaysia also did the social Sukuk earlier this year, I think there are other instruments within the Islamic finance and the Islamic economy that could be used in order to fulfill some social objectives, such as Qard Hasan, Waqf, and Zakat. Zakat, for example, the amount is reportedly bigger than the overall size of the Islamic finance industry.
Good. And look, just to touch upon those points when it comes to sort of investors, we have a question here from the audience, which is there more international demand from bond or Sukuk investors investing in ESG Sukuk rather than non-ESG Sukuk? Anka, do you want to see if you can give some input into that question?
No, that's a good point. I guess Dino covered it pretty well. As far as the Sukuk universe goes, at this point, they don't score the highest in ESG. Clearly, data point is also a big issue. So as far as we have seen across our investor base right now, we haven't seen that sort of a push yet. But what's definitely been interesting is, with all markets, it's a two-way street. A number of regulators, especially where a number of our funds are currently regulated, are certainly making for a lot of push to integrate ESG, and that's also more or less then getting consistent with what the expectation is in terms of client demand going forward. So I think we are in the early stage of that evolution, but the speed at which we are going to get there, if we don't prepare right now, in 12 months' time or 18 months' time, it will be too late.
Okay, good, excellent. So look, looking at questions, there's a couple of questions here that are talking about AI and blockchain. First one is, what will the impact of AI be on this sector? The other question we have is, are you considering using DLT and blockchain to promote Sukuk or to get access to new markets? Can crowdfunding be an alternative to Sukuk? Are you considering Muslims in Europe as possible target to Sukuk issued in Middle East? Looking at sort of blockchain, maybe Mohammed, you might be able to share some views around using blockchain, because we've seen fintech is becoming disruptive in certain areas of the banking and financial markets. Do you think it can be used within the Sukuk space in any way?
Sure. I think blockchain can resolve three problems that the Sukuk market faces today. The first problem is the traceability of the underlying assets, because when you start your Sukuk, you have certain underlying assets that could be substituted during the lifetime of the transaction, and the risk profile of your transaction would change completely, and you wouldn't know as an investor. So that problem can be resolved with blockchain, because each time an asset is taken out and a new asset is put in, this will be documented in the blockchain. The second challenge that the blockchain can resolve is the traceability of the cash flows, and that would help for the Sukuk, where you have a multitude of underlying assets. It would help to implement corrective actions promptly when it's needed. For example, today, if you look at some of the Sukuk that were issued using a multitude of contractors' underlying assets, literally 3 or 4 days before the payment of the periodic distribution, there's a gentleman or lady trying to reconcile which asset performed, which asset did not perform. And if there is a misperformance, then it's usually the optional liquidity that is provided by the sponsor. But with blockchain, that situation could be resolved because each and every time your asset will not be performing up to expectation, you will have the information upfront. And the third issue that blockchain could help within the Sukuk industry is with regard to the traceability of the investors. And here it would allow a swift resolution of problems when Sukuk need to be restructured, for example, and when you need to go back to who is holding your Sukuk. Today, it's done, the process is done manually. With blockchain, you would have a ledger showing on a real-time basis who is holding what. I think there were a few interesting experiences in the blockchain and Sukuk space. And there was a company launched in the GIFC last year with a platform for issuing Sukuk using standard legal documents and blockchain. And I think if this business or if this model were to be adopted by the market, it could offer some growth opportunities, especially for the mid-size or small corporates that are looking at the Sukuk market and cannot get in because of the costs or because of the complexity.
Good. I think, it comes back to that point that was mentioned earlier around standardization. And one of the issues we have in the Islamic finance industry is that issue of standardization across, the globe. And I think that's one of the key things that would need to be looked at when it comes to using blockchain as a technology. I've got a question here. Can ETF Sukuk provide opportunities for retail investors? And one of the questions I did want to ask the panelists was around accessing retail investors when it comes to Sukuk, because today, if you look here in the UAE, retail doesn't have access. I think one of the points with Ali sort of raised was that dirham market needs to be developed here. I think accessing the retail market would support that as well. Maybe if I can start with you, Ali, around the fact that is retail important to be included when it comes to the Sukuk market here in UAE? How can we develop that retail and ETF, for example? Can that be a good access point? Because we've seen, ETFs in the West are really growing rapidly, whether it's equity-based or fixed income-based or, even commodity-based. We haven't seen many ETFs here in the region. Last month, there was the Chimera ETF that was listed on DFM. It's a Sharia-compliant ETF, but again, equity-based. Do you think a Sukuk-based ETF will work to access capital from retail investors and give retail opportunity?
Yeah, I think the problem we've seen in the Sukuk market, especially in international Sukuk issuances, is that the bar to entry for investors is quite high. It's around $200,000, to invest. And really, these Sukuk are targeted towards institutional or wholesale investors, of which there are plenty. I think for us to see the retail market develop, we need to see lower denominations, and really that will come through mostly in the local currency markets. There are some fintech companies working on on trying to provide solutions to retail investors to lower that denomination threshold. I came across a company recently, I think it's called Enabler, which is looking at reducing that threshold to $1,000 per Sukuk. So if that happens, then that will really mushroom the growth of the ETF market when it comes to fixed income and Sukuk here. But I think there is more to do in this space. You're right in terms of the fixed income ETF market in the developed world, developing better, let's say, than the Sukuk market here. But I know they've had challenges around liquidity of late as well, because bonds are traded over the counter, whereas equities are exchange traded and much more can move much more quickly. Maybe Angad or Dino can.
Yeah, I'm going to be a little contrarian here, and I would be very cautious about, encouraging, issuers to access retail investors directly. I mean, as professional investors, we're already having issues around governance, being able to do research, fraud. I mean, we have every year, 2 or 3 examples where, there's some sort of malfeasance that we need to deal with. And this is us, deploying resources, really capable managers, accountants, rating agencies, and all of that. And we still have, almost on an annual basis, 1 or 2 scenarios where, we could have avoided these losses. To make that, to make these types of issuers, immediately access a retail audience with the current regulatory and supervisory setup, I think is actually premature, and I don't see the benefit of it yet. I think it honestly is too early. Retail investors can access Sukuk. We do have mutual funds available, and those haven't really scaled up yet. If you want to be objective, I mean, when you talk about the U.S. having ETFs, yes, but they had trillions, tens of trillions of dollars in mutual fund assets, and the ETF became a different vehicle through which, a low-cost vehicle, through which to offer this retail audience. I think we should pursue low-cost strategies and have these vehicles, but I think if you want to really look at that, you want to be looking at that through the development of your asset management industry. You need to support the development of non-bank financial services. I think Ali talked about that earlier. He wants to see awqaf, he wants to see pension funds, he wants to see asset managers like us and locals and foreigners offering these different products. And we will be the buyers, if you want, of these sukuk. Going directly to the retail investor in this environment, I think may end up doing more harm than good, frankly.
Yeah, and I think the key word you mentioned here is regulation, and I think in order to open the market for retail investors, you need to have a proper regulatory framework. And I also agree with you. Today, I don't think the issue is about finding investors. Each and every time you have a sukuk coming to the market, it's heavily oversubscribed, it's kept as a hold to maturity instrument. I think the issue is more to try to push the offer side of the sukuk and at the same time work on a regulatory framework in order to prepare the market for the retail investors.
Yeah.
I think on that point, some of the markets, the regulatory framework for retail fixed income issuances is there. I guess, retail sukuk is very important for me as well, because when you look at it as a retail investor, what options do you have when it comes to investing in a Sharia compliant manner? You go to a
Tahir, just talk to Angad or talk to me. We'll sort you out. Don't worry about it. We'll tell you.
So look, anyway, we're coming towards the end of this. There's one interesting question here. Then, considering we're talking about investors and retail and information and what have you, the question is: do investors ever ask for Sharia order reports for Sukuk? And is it mandatory from IOFI's perspective? Obviously, when a Sukuk is issued, the fatwa needs to be issued, Sharia needs to review and sign off. But do you ever get investors asking you to view that Sharia report or orders to be undertaken once the issuance happens?
So in general, our experience is that the clients haven't been getting that specific, and we went through great lengths to actually bolster our underwriting, if you want, criteria. We have a Sukuk rule book, and we definitely spend a lot of time about kind of the governance, the SPV or the post-issuance governance around these issues. In general, I think that's a big area for improvement. We haven't seen a lot. I mean, I think Muhammad talked about blockchain, how that can improve. Our experience with defaulted securities is that Sukuk have tended to do worse than conventional bonds when it came to rounding up the Sukuk investors to be able to push forward the creditor, their rights, in a restructuring or in a default. So this is an area that I think the industry needs to, there is room for improvement, certainly, and we haven't seen, but we haven't, the push is really coming from us and kind of the involved stakeholders, but it hasn't necessarily come from the clients. I think from their perspective, they're kind of outsourcing that to the other professionals or stakeholders associated with the issue.
Yeah, maybe if I can add, I've seen some investors asking for the fatwa, and I've seen some of them putting out because they didn't like the fatwa or they didn't like the structure. But what I haven't seen is regular audits of the Sukuk from a Sharia compliant perspective, whether internal or external. And what I haven't seen is the Sharia audit trying to push some kind of market discipline. And I think this is something that could also help the future development of the industry.
Yeah, maybe I'll just add very quickly. Look, I don't think we have really seen. I think the Islamic banks which issue have their own internal governance around Sharia audit, so they do regular Sharia audits. But I think when you see sovereigns or corporates issuing, so from time to time we'll have a question from an investor asking for an update on the underlying assets. But otherwise, no, we don't really have Sharia audits reports regularly.
Okay, good. All right, excellent. Well, look, thank you. As we bring this webinar to a close, I'd like our panelists to give us their closing remarks on what we can expect in the Sukuk space for the remainder of 2020, moving into 2021. If I can please ask you to keep it very short because we are running out of time now. Let me start with Mohammed.
Sure. Reminder of 2020, I think, muted performance. I think the market, the volume of issuance in 2020 will definitely be lower than what we've seen in 2019. 2021, we could potentially see an acceleration, assuming that the economies in the Gulf and elsewhere, the core economies for the Islamic finance, start to recover as expected, and assuming that market conditions remain supportive, which as we stand today, it looks like it's going to be the case.
Angad?
Yes, I guess the way I see it is 2020 was once again a year of many firsts. You had a corporate hybrid perp from DP World, something I haven't seen since the GEMS issuance back in 2013. Despite very attractive yields, you had not seen a long end issuance in a long time. So it was good to see Indonesia come through with a 30-year long end.
Yes.
And then so I guess the expectation is going forward for the rest of this year and into 2021 would be a lot more many firsts for this region. For a long time, we've talked about why has Egypt not really come to the market. So hopefully a lot more interesting issuers coming to this market. At the same time, there's been some underwhelming issuances from developed market who've not really come and refi their sukuk. So hopefully we should see some of that as well.
Good. Ali, your thoughts, please.
I think a lot of the issuances that happened this year have been conventional sovereign issuances. So I think some of these sovereigns will start looking at the sukuk market end of this year and into 2021. So I expect more activity there. I expect more activity in the private sector corporate space as well. I think that has really lagged, and just overall general corporate activity as GDP growth returns.
Good. And last but not least, Dino, please.
Yeah, thanks. I think that the issuance is going to be kind of consistent with the past, but what I'm really excited about is that the Sukuk market had a very good crisis. Year-to-date returns are almost 7% up, and as we talked about earlier, the drawdowns were less than 30% of a third of emerging markets and other high yields. So the Sukuk market has had a good performance. It continues to reinforce its defensive characteristics, and we think investors are going to want to continue to invest in this space. And I think as they do, that provides incentives for issuers to tap into that demand. So we're overall excited.
Excellent. Good. Well, look, gentlemen, thank you very much for your participation today and sharing your insights into the Sukuk market. It's been a real pleasure having you on this panel. Ladies and gentlemen, I'd like to thank you all for joining us today for this GIES Series webinar on the opportunities and challenges in the Sukuk market, organized by Dubai Islamic Economy Development Center and Dubai Chamber in strategic partnership with Refinitiv. We look forward to welcoming you again for the 5th GIES Series on 12th of October. Thank you very much. Have a great day.